many of my clients, and I'm sure many of you as well, it's time to reprice or refinance your mortgage rates, or maybe someone is looking to buy a property and you need to get a loan. I wanted to talk about something that's quite glaring in the market, which is fixed versus floating rates. So if you look at today's rates, in fact, fixed loan packages have a lower rate than your floating rates. Usually, about 2 years back, some of my clients got loans for their property, and at that time, right, usually the fixed rates are higher than the floating rate because the banks feel that okay, there's some risk, so if I give you the floating rate, it will be lower, and if I give you a fixed rate, you pay a bit more, but it's safe. You have a number that you can focus on for the next few years. So when we have a situation where banks are saying if you take the fixed rate, let's say it's 3.55, 3.45, that's about the range nowadays. If you take a floating rate, that's about 1% plus SORA. SORA today is about 3.6, so it's 4+%. Now we also have packages where you can get a fixed rate for maybe 1 or 2 years and then follow up with a floating rate. So there are such packages available. So my question today really is, if I'm going to take a loan today, which one would I choose? If the bank is telling me that at a fixed rate, they can give me a lower percentage, and at a floating rate, the percentage is higher. I don't know, this is my personal opinion. I kind of feel that if a bank is giving me a lower rate on fixed, what's the message it's trying to tell me? I think generally there is maybe some indication that rates will come down in the future. I'm not sure, nobody knows, but looking at China's economy and generally how everybody's doing, things are not doing that well, so whether the rates will continue to climb for the next 2 years is questionable. Now, whether the rates will come down, I'm not sure. But given a choice, for me personally, I tend to swing towards the fixed rate because I'm risk averse. But if you are more of a risk taker, then maybe a floating rate is a worthwhile risk, because if the percentages come down, the interest rates come down, then you win. I mean, really, you're looking at the next 2 to 3 years, right, when you're doing that. One more thing that many people don't see is that the interest payments over time is a lot of money. So if you are thinking of repricing or refinancing, if I was thinking of repricing or refinancing and I can afford the monthly payments, I'll try to reduce my tenor by a few years, because that means that overall I'll pay less interest, and that to me is a win. It's a win if I can afford it, and if I feel that it's stable for my income is stable for the next few years at least, right? So I just want to leave you with this thought, in case you're doing refinancing or repricing, or you're getting a loan for a new property. Things are a little bit different now from a year back or two, where fixed rates are actually lower than your floating rate, so something to consider. If you are a safe player, don't want to take any risk, then I will take the fixed rate. If you think you want to take a risk and say maybe the floating rates will come down, then you go for that. Of course, if we think about the economic situation, it's not looking all rosy, so there is chance of rates coming down, but we don't know when. Then the other thing, of course, is try to take a lower tenor, then the overall interest payments over a period of time is less. So I'll leave 2 charts at the end of the video for you to just look at, just comparing fixed and floating, as well as what if you reduce the tenor, what's the impact. Have a look at the numbers, they can mean quite a lot. That's my tip number 14, so happy buying.